All right, thank you guys. I'm Dean Nicolacakis. I'm a partner with PwC Financial Services Advisory out of San Francisco, and I co-lead our FinTech practice. So very happy to be here. Thank you to the forum for inviting us here today. Also honored to be joined here by a variety of guests with very interesting backgrounds in this space, both from being immersed in the innovation sector themselves, as well as kind of playing the role of the key enablers of digitization, and folks that are either have been working in banks or are now working in banks. So we have a great kind of combination of experiences here. Just to give a little bit of backdrop around the transformation, and at least how we're seeing it. You know, I had a pleasure through my career of being able to kind of go through the whole internet bubble, actually doing some work with Jamie 15 years ago at one of the bigger banks, and kind of seeing the new state right now. And a lot of the questions that we get from our clients are, you know, is this just yet another bubble, right? And part of it is skepticism around some of the business models and how whether they can last economic cycles, and part of it is you know, the movement of all the investment money and kind of how sticky is that investment money gonna be. I would just say that our general view is that there's enough factors that have changed the landscape that we think there's just a new normal for how innovation is going to happen and how it's really going to influence the kind of traditional incumbent financial services industry. And I guess I'll highlight a couple of things. One of them is, you know, in general, the financial services industry is not really good at innovation, right? I mean, I think the industry is just known to being kind of inside out. It hasn't really built all the muscles to really be a very good outside-in kind of industry. And if you look at just the pure spending, you know, financial services spends about $300 billion globally on technology. About 40 billion of that is on what you might call innovation. And if you add up all the dollars being spent outside of financial services on innovation, it's about 25 billion this year. So somewhere north of a third of all the innovation in the entire sector is being done outside of the sector. And the industry is really not designed for that, right? It's a very insular kind of industry, right? So there's a lot of shifting that's happening as the industry is trying to figure out how to adjust to that model. And we think when you look at the underlying factors around the ease of actually to innovate technology that you don't need, you know, $5 million of capital to go set a stack of servers up and stuff, you can get up and running in no time. The amount of engineering talent out there. The fact that there's a big population shift that really has very low trust in the general incumbents and is much more open to, you know, app-driven solutions, so to speak, that it's really a new paradigm. So I'm going to actually ask the folks here to spend a couple minutes introducing themselves to you and to give their kind of top take on what they think is, you know, the basis of what's going on here, and then we'll do a couple of questions and kind of chat amongst us, and then we'll open it up to you guys to also join in with questions. Would you like to go first, Zach?
I would love to go first. So let me just give 30 seconds on my background for some context, because it's a little unusual. So I worked for a long time in government agencies, fixing big bureaucracies in IT, and it just happens sort of quite randomly that I was working for Cory Booker as and I got an assignment around financial inclusion and financial empowerment, which was like, figure out why people in Newark don't have bank accounts. And I went out and I talked to a lot of people who are quite poor, and I sort of chatting with them, and I think that in my experience there was a misconception that they are ignorant of the financial products that they should be accessing. And that wasn't what I found. They knew they shouldn't be using payday lenders, they knew they shouldn't be doing check cashing, they knew they needed bank accounts. It was really an issue of access. And then I went and I talked to Wells Fargo and JP Morgan and all these retail banks, and I'm like, why don't you just give these people bank accounts? And the response was, it's actually pretty expensive to give people bank accounts. So if we can't make a lot of money giving them financial products, it doesn't really make sense to just give them a checking account. And as someone who was a technologist, that just seemed really bizarre to me, that there would be these really high fixed costs for what is essentially a series of database entries. So I'm like, that just seems really broken at an infrastructure level. And that's how I then spent years working on financial infrastructure. So I work at Stripe for a little while, and I do automated underwriting work, and then I applied to Y Combinator, and I run a company called Treasury that was working to build API platforms in banks, and then about 6 weeks ago, I got bought, or the company got bought by Silicon Valley Bank, and I now work there trying to fix their financial infrastructure. I do want to just push back a little bit on something Dean said, which is I think that banks, it depends on how you define innovation. I actually think banks are really good at figuring out how to make money historically, and if like you want to get an innovation in a financial product, they actually pretty much figure it out. Like, I don't even know all the fancy products that exist, but they sort of can iterate there pretty quickly. And you see in capital markets areas that there has been a really strong incentive to fix your technology and to make it better, and they have done that. So I remain an optimist that like banks are going to be disrupted at some level, but that what there really is going to happen because of their regulatory position is that they're going to figure a lot of this stuff out and assume it or partner with people. I'm going to say one more thing because I'm erring more towards 8 minutes, which is what we said we didn't want to do. I think in most other industries, or many other industries, you've seen a separation between those people who are concerned about user experience and those people who provide infrastructure. And the canonical example here would be something like Amazon Web Services and the entire internet, or Twilio and the people who use text messages. And I think that's a place that banks are both really afraid of, but sort of need to own. They're really afraid of it because they say to themselves, I don't want to, my real expertise is in owning the relationship, cross-selling, figuring out how to get the most out of my customers, and it's really a marketing and brand thing. But I think a lot of that is going to move to whether it's Simple or Braintree or Green Dot or whomever it is, and those people are and those technology companies are going to be able to iterate Square, going to iterate quickly on user experience and on marketing and on targeting and all of that. But fundamentally, because there are just certain things that only banks can do, like they're the only people who can really store value. They're the only people who can access most of the payment systems. They're the only people who can actually give you a insured bank account. Those sorts of infrastructure things are going to exist, and that separation is something that banks have to get comfortable with and then enable and sort of have a like thousand flower strategy. Like JP Morgan's merchant services shouldn't really concern themselves about how to acquire small businesses. They should partner with Braintree. They should partner with Square. They should partner with the next Square. They should partner with the WePay. They should partner with every competitor under the sun and just provide them merchant IDs and all of that card processing, and then they should let the tech companies battle it out at the user experience level.
Thanks, Zach. So you're, just to retain, you're seeing the role of the financial institution becoming more of a central utility around the things that they're really good at, the regulatory management and all that.
Or that's my thesis. I mean, other people certainly disagree.
Let's keep building upon that.
I actually agree with pretty much everything you said, so. Hi, everybody.
Go first.
Yeah, hi, everybody. I'm Ankur Arya, GM of mobile for Braintree. If you've ever used Uber, or Airbnb, or Muntree, or these really sort of fast-growing mobile commerce experiences on your phone, the payments behind those services are being powered by companies like Braintree. And so I think, quick bit about my background. Prior to Braintree, I've been there about 3 years, heading up the mobile side of the business. We are now part of PayPal, which you all may know, and also acquired a P2P wallet a couple years ago called Venmo. So I think we're very much in the kind of epicenter of money movement, whether it's commerce or whether it's between people. So a lot of really interesting things that we have going on, and also interesting vantage point. Prior to Braintree, was at Google for a couple years, working on Google Wallet, way in the early days of Google Wallet. Prior to that was an early guy at a mobile ad startup called AdMob, which Google acquired. So I've been working on trying to make it easier for developers to make money on mobile for many, many years. I think the fundamental shift that we're seeing is that I think consumer behavior is just forcing a change in the way that money moves, whether that's how people want to pay for things on a mobile device, whether that's the kind of experience that people want when they exchange money with each other, whether it's people wanting to convert currency to the currency of a different market without having to pay the exorbitant foreign exchange fees. You think of companies like TransferWise, who's building a marketplace for sort of peer-to-peer currency exchange. I think the expectation is just changing. We'll talk more about that in a bit, but if you just think of buying something on your mobile device and you think of the magical experience you have when you order an Uber, that's now becoming table stakes for every other app on your phone, right? So if you're Walmart or Target or Best Buy, that's the experience that you're competing with. That's the expectation I have as a consumer now, is that my purchasing experience should be as frictionless as something like Uber or Munchery. And so I think that's causing a cascade of change across retail, across payments and banking.
All right. Is this one on? Yeah. All right. Jamie Armistead. I head up digital channels at Bank of the West. I've been there a little over 3. There you go. That's even better. I've been there a little over 3 years. And digital channels to us is public website, online account opening, online banking, mobile banking. Before that, I was with Bank of America for about 11 years, all in the digital space, and built out various functional groups there. Before that, I was in services, working for banks. So pretty much all I know how to do is build bank websites and mobile apps. That's pretty much it. So go back to a little bit of what Dean said. I agree for the most part on the innovation front. I mean, certainly we earn the reputation of not being able to innovate, and that sucks for somebody who spent most of his career there. So I think
But you have done some.
We have, yeah. So I've tried to fight that trend. Well, and I think what you see is you innovate. You sort of see innovations being brought to market within banks. And so USAA did remote deposit. I'd say Chase got all the notoriety for it, for running a TV spot. And that's a great capability, right? Who doesn't deposit their checks? When you do get checks, why are we still using checks? That's a different story. And that brings up a different part of the point. So you do see these point solutions and innovations. Bank of the West, we're the bank that brought the pre-login balance check on mobile to market. We call it Quick Balance. It's been copied by pretty much everybody at this stage. So we did that. So there's little things that are brought to market. I think where we really, really struggle is, as an industry, things that need to change, that require change as an industry, we are horrible at. We do not move collectively at all. And the more banks you get involved, it elongates the speed proportionate to the number of banks involved. And it's tough. So P2P is a perfect example. So I go back to the days at B of A when we were talking about PayPal, and we're like, wow, okay, that's a threat. How long have we been waiting for an industry solution on that, right? So, and then I was still at B of A when Clear Exchange was formed, which is the consortium of the 3 biggest banks. And we're like, okay, it's the PayPal killer, right? And okay, we're gonna have open APIs, and all the banks will get on board. And once we have P2P ubiquity, it'll change how money moves. Think about P2P ubiquity, where the money just moves into your account. So Venmo doesn't need to exist. The other solutions, they don't need to exist. And you would expect, if it's an expected capability, it becomes ubiquitous. And we're still waiting for Clear Exchange to onboard the 3rd or 4th. Actually, they've got 4. They're waiting for them to onboard the 5th or 6th, or and how do you get 1,000+ banks on there? So that's where we really fall down, is seeing these trends. And it's not. I mean, this has been PayPal 15 years. Yep. Right, that we've been staring at this. So that part of it is very frustrating. It's frustrating for me as somebody who works in the industry. I think the other part, I'll take a little bit of exception to Zach's characterization that we should just seed the ground on user experience and customer experience and focus on the back end and the infrastructure. A good portion of my background is in user experience, so maybe I take exception for that reason. But also, a good third of my team is all design, right? So we are heavily focused on the front end user experience, and we look at experiences like Uber, and we look at what Braintree has done in enabling the payments, and we say, yeah, that's how it should be. That's absolutely how it should be. So hold ourselves to a much higher standard. Look at our mobile application, and if there's things that companies have done I think Amex did a nice job integrating Apple Pay into the app experience. You don't have to seed the ground on the payment to Apple. You don't have to seed the ground to Android and Samsung. You can integrate these things in the mobile experience. So, I'm still looking at it as how do I continue to maintain my customer relationship? How do I do it in a way that meets their expectations? So these experiences can absolutely be brought to market in the context of a banking app. I don't need to invent everything by any stretch. We absolutely look for ways to partner with with the startups and partner with the other technology companies, but bring it to market in a way that's integrated. And absolutely, I do agree 100% that the quality user experience is table stakes.
Well, on that point about the customer experience, one thing I will add is when we talk to our clients that are innovators, getting clients is the hardest part. Okay, once they build whatever they're building, then it's how do I get customers, right? And the banks have the customers, right? So there is I think this interesting aspect around how is this actually going to work? Is it literally going to be the model where innovate and integrate, and like you're saying, or is it going to be that platforms like Venmo get huge, usage, and then you're in a position, well, okay, we lost on that one. You're not going to, the PayPal example you gave, right? Mike.
Yeah. So my name is Mike Dinsdale, and I've actually been the CFO of DocuSign for the last 5.5 years, and now the Chief Growth Officer. So this is actually the first time I've spoken as the Chief Growth Officer. So I'm panicking to make sure I say something smart. So literally, just laugh, and when you walk out, just pat me on the back and say, nice job, no matter what I say. But how many people have used DocuSign just out of curiosity? Okay, I love asking that, especially in Silicon Valley, because almost everyone puts their hand up. How many people pay DocuSign out of curiosity? Yeah. All right, well, and so this sort of dovetails into, as Chief Growth Officer, one of the things I'm focused on now is consumer value prop, and what is it? Why would people pay us? And in some ways I care, in some ways I don't care if people pay us, as long as everybody uses us. And so as Growth Officer, I'm focused on that. I'm focused on developer networks, so a lot of things that are relevant to this discussion. And as I started to think more and more about consumer value prop, you start to think about payments and how you integrate payments into the stream of transactions. And then it's not only just, okay, businesses being able to collect payments, but then you start to get into cool things like what I think Venmo has done. And I think there's a lot of great aspects to things like Venmo, and there's also things that I think don't make any sense, like who cares about a social feed of who I'm paying? I find that part almost silly. But I love the app, and I use it. And I can see that in DocuSign's case that where we're focused on payments is in a couple of areas. One, we want to turn on all of our business customers so they can collect payment in stream of transaction. The stuff that we've done with Visa is looking at how you take DocuSign experience with Visa payment infrastructure and even building and looking at things around blockchain as well, so using public registry. So starting to sort of expand how people think about transactions and how you can leverage these different pieces of technology. And then we think about the consumer application and think DocuSign as this trust brand. We have one of the things that you're talking about that a lot of other companies don't. We have a huge number of users. We have about 60 million uniques on our network now. We add every day about 75,000. So we have a huge stream of users. And so my role actually becomes a little bit easier because I put in front of this huge stream of users different value props and different calls to action so that they can engage with DocuSign in a more frequent way, right? As a consumer, I sign a transaction and then who cares? Like maybe I look at it, maybe I don't. It's something that I do pretty infrequently. But at the same time, when I do it, it's incredibly valuable. And so when we think about how our world sort of transitions along, we start to think about things around payment and how we start to build in that consumer application. Do we get into the payment space in general, which we may, because we have a lot of attributes that I think give us a leg up, meaning we have huge numbers of users. We're a global trust network. We already have the secure network. We have 5 nines availability. We have global coverage. We have a lot of pieces that are making us sort of look at this space and say, maybe there's something we need to do in a much bigger way into payments. And then the other sort of random comments, and I think it's with banks. So I use Wells Fargo and Chase as my personal bank, and honestly, I don't know why. I think I just arrived in the U.S., and those are the first 2 I bumped into on the street, and so I've been with them for 14 years. And when I was driving down here today, I thought, I'm just going to kind of check out my little Chase app and see how easy it would be to do a payment like I do with Venmo. I've been sending everybody $1 that I know because I love the app, so I'm like, here's $1, check this thing out. So hopefully I don't deplete my bank account and have a shock when I log into my Chase account and they show me how much money's left. But I tried to do the same thing in my Chase app, and it's like 15 clicks to get there, and then it's asked me who I want to send it to, and it doesn't look at my contact list. So then I have to try and figure out what someone's phone number is, and I don't know anyone's phone number except my own. And so, you know, how do you, the experience is terrible. It doesn't work. And so they'll never gain traction for those types of use cases. And I have no idea why they don't just have like a Chase Pay app and that's all it does. Or why isn't there a Wells Fargo app? And I did check on the iOS today just to make sure they don't have that, because I just didn't know about it, but they don't. So they don't seem to understand in banks, just make these smaller applications that do the things that I want to do and make them like dead simple. And that's what these other folks have sort of the secret sauce. And it's so simple, but yet somehow people don't do it.
Yeah, you bring up an interesting point. I'm going to turn that into a question. So we had, you know, PwC, our average age is 27, just because of the nature of our firm, right? So we have excellent access to how millennials think, right? So we had this this group thing on a few Fridays ago, and we were asking people. So we're in this session, and someone is apologizing to someone else while they're handing them $10, and we're like, wait a minute, what just happened there? And what happened was that they were going through the iOS upgrade, and their Venmo app wasn't updated at the time that they were at dinner or whatever the night before. And it was this apology. I can imagine you're apologizing because you're giving someone cash. Like, you know, so there's a new kind of norm around what people expect. And we asked this group, you know, what do they think of when they think of, bring any kind of financial need. And what do they think of? And they think of apps is the first thing they think of. Even to the point where we had this discussion once with the same kind of group, and one of them was complaining that they moved into an apartment that had a Coinbase laundry, and they had no idea where you go to get quarters. Right? So you see this, like this, the mindset of the expectation around this experience. So what my question, I guess, to the group is, so, you know, why is it that you have all the customers, if you're a bank, you're obviously focused on experience. So what are the constraints, I guess, that you guys, maybe you guys that work with banks, or all of you, I guess, work with banks, what are the main constraints that are keeping the bank from actually flipping to the outside-in model and really designing these great experiences?
I shouldn't really answer this question, but I'll just say something that I just thought of while you're talking and then pass it to folks that can. But even when you look at the various bank apps and the screenshots that they show of the app, one of them is always like, find an ATM. Like, I don't know why anyone would want to find one, but that's like one of the things, like find an ATM. And so my suspicion is part of the constraint is that they have this enormous network of like people and places that they have to try and drive people to go to. But I don't even know where my bank is anymore. And sometimes you're asked, like, what's the address of your bank? And you're like, I don't know. Like, New York? I'm not sure. Like, who knows where it is, because I've never been there. And I'm never going to go there.
Yeah, very good.
So it's not, like, focused on, hey, here's the things that you want to do in your life that you actually, people do. Like, take that $10 and put it into a machine somewhere. I don't think people think like that anymore. So.
Yeah, Jamie.
Random,
so do you see it? I guess, Jamie. Like, how do you see it? Is there a talent?
Well,
constraint,
this is our ideal customer, right? So I mean, really, I mean, I'm not going to say we don't want our customers. We want our customers to bank with us however they want, but obviously the trend, there's a steady decline in the industry. Of branch foot traffic is steadily declining. ATM traffic is declining. A look at remote deposit is growing. So you see all these trends. They haven't hit that inflection point necessarily where the branch traffic is so low, but it's all of those things stand in our favor in terms of just taking cost out of what is the expensive physical assets in the branch networks. ATMs are not nearly as expensive, and people still do use them. You know, I think there's a question as to, you know, if you took away the fee-based structure for ATMs and not charge people to use the ATMs, would you actually garner more customer favor than and be willing to give up the fee revenue? But very few have taken that tack. But to the innovation question, I mean, a lot of it's cultural too. I mean, you think about how banks work, right? Think about, you know, you've got annual budgeting cycles, having just come out of my annual budget meeting on Friday. So, you know, you're going forward, and here's the roadmap, and here's the expense, and here's the funding for next year, and we're Bank of the West is owned by BNP Paribas, so our budget rolls up to a parent company, and you go through that process. There's not really an opportunity. I don't bring forward a budget that says, and by the way, maybe 80-90% of what we're going to try is going to fail. Doesn't really work that way, right? And so that's culturally not in our DNA. It's, you've got to have a sound and solid roadmap and articulation of why you're doing these things, and speculative bets is not one of the criteria. And we try to loosen that up, and that's I'd say one of my responsibilities is try to change that culture a bit, to be willing to place some more speculative bets. And get the funding and say, okay, yeah, we're going to bring these things to market. We're actually quite good on the technology front. It's not we're not the least bit incompetent. It's one of the best technology teams I've ever been associated with that we've put in place, and we're bringing stuff to market every quarter. So it's not at all a question of ability. It's a question of how speculative is the bank willing to go, and how far out on that limb can we push it?
Yeah, let me pivot from that, if that's okay. So what you're hitting on, which I think I'm going to ask you gentlemen to jump in on here, is every one of the big banks. In fact, I think that I saw a survey yesterday that said 97% of banks now have some person who's named Chief Innovation Officer or something like that, right? So, and most of the big banks have presence here, like Citi, that was here earlier, and they have venture arms now, right? Some sense of structure that's giving them a little bit of that freedom to be able to experiment and invest without, an immediate, 12-month payback kind of, budget requirement. So maybe flip open the question, right? So let's talk about that model, right? Is there some future open innovation model that you guys think is, the sweet spot model for how these two ecosystems will coexist and work, best together?
The only reason I would take this, so at DocuSign we actually have a bunch of financial institutions that invested, and so I want to actually go back on my other comments a little bit. We have a ton of big banking customers, and we're solving big enterprise problems, and they're very important customers to us, and it puts us in a unique spot that we can go end-to-end on transactions right through processing, say, to mortgage or things like that in real estate. But on the venture side, so I know Vanessa was just up here, and Citi Venture is an investor actually in DocuSign. Visa is an investor in DocuSign. BBVA, which is a Spanish bank, is an investor in DocuSign. We've talked to banks all over the world, and as I say, they're all our customers, but they're all our customers focused on their business problems. Actually, I think Citi, Drew, who's one of our SEs at the back here, Citi went live today, which is kind of cool that we're able to talk about it here. But those venture arms, those guys are out there finding really cool companies, and then they're investing. And then what they're doing is helping us drive into these big bank ecosystems, because it's almost impossible to figure out who to go to and who to talk to. Where do you go to Citi and get in front of the right person to actually get something done? So anybody who's in this space, I highly recommend getting in touch with these venture groups, and they're all over the world that they're developing, because every single bank has people, if it's not the chief innovation officer, they're focused on digital transformation, and it comes from the top in every single bank that they have to reinvent and start to serve customers in a different way, and that is an absolute imperative. And these venture groups, that's one way. The other way that's been effective for us, and this goes back to sort of the CFO days, a lot of banks have also groups that are either reporting to the CTO, like at B of A, where their only job is to help find new tech and drive it into the bank and help shepherd you around. Because imagine at B of A, who do you talk to? Right. They have David Riley, who's a CTO, has a group, and that's all they do. There's about eight people in that group. And all they're doing is out trying to find tech and then shepherding you through the big maze of who you speak to. So those two things, I think, are huge for companies trying to figure out how to get into the banks.
Yeah, very good. You guys want to add to that? Go for it.
Yeah, I think the venture arms of banks are really good at finding companies that solve their narrowly tailored business problems. And I think actually Vanessa said that they do a lot of investing in cybersecurity or things like DocuSign.
Emphasis on the word narrowly tailored.
Yeah, that was perhaps a little too far, but I think the point is that most of these venture arms aren't trying to disrupt the model of their parent. What they're trying to do is say, we need to do some process reimagining around real estate, signatures around mortgages. DocuSign solves that problem. It's really hard to sell to the enterprise. It's like selling to the Pentagon if you want to sell to Citibank. So we're going to make that a lot easier. I don't think that if innovation to me is the ability to respond to customers' needs quickly, deliberately, and not particularly expensively. I don't think that banks are particularly good at that. And I'm sure Jamie has an amazing technology team, But a quarterly release cycle, by definition, is just not. I presume Braintree releases daily or hourly or whenever.
Yeah.
That's a different mindset, and I think the responsiveness that gives you is really something that banks have a lot of trouble with. I think that what you're going to see, I remain a little bit optimistic because I think that what banks are starting to do is instead of saying we're going to name a chief innovation officer that's like part of the whole ecosystem, they're doing what like IBM did to create their PC division, which is they like named one guy, moved him to Florida, and said you have nothing to do with IBM, build the PC division. I think banks are starting to do that. They're starting to say, well, maybe what we need to do is create a new line of business, and we can pitch it to the regulator, and it actually has a loss budget. Like, you got $5 million, and figure out your own IT, and then like we'll send you the best compliance person. We'll send you the best risk person, the person who can think the most out of the box, knows the rules, but is willing to really think a little differently. And I think those are interesting opportunities. But again, my thesis is definitely one where I think partnership and enabling these companies is the best plan. I think if someone was forward enough to have really done the seed round in Lending Club, if a bank was able to do that, then that bank would be in a much more powerful place to like leverage their customer base into Lending Club for their retail customers. But they weren't willing to do that. Like near when Lending Club went public, the CEO of Wells Fargo sent a memo that says, I don't want any employees borrowing on Lending Club, and I don't want any employees lending on Lending Club.
Even though they were big investors in Lending Club.
Yeah, because they're just so afraid.
Wells Fargo made a lot of money on Lending Club.
I was just going to add, I mean, I think to some extent the banks still enjoy a relatively comfortable place in the ecosystem, right? I mean, they still, are sort of the primary relationship holder with the consumer, and I think, I can't quote what the latest statistics are, but some banks may be seeing decline and some are just not growing as fast in terms of their consumer base, but they still enjoy a relatively comfortable position. I think what's interesting to see is by contrast, and not that the card networks are not in a comfortable position, but they are very eager to build a direct relationship with consumers, right? And so if you think of like your credit card, right? What's the big brand? What's the little brand, right? I think it's typical that the card network is the little brand on the card, right? You as a consumer don't associate that you have a relationship with Visa or MasterCard, right? And I think if you see some of the investments that these card networks are making in terms of investing in other companies, in terms of their product set, having their own checkout products. So you look at like Visa Checkout, for example, this concept that, I actually want to have a username and password relationship with Visa. Right. I mean, they're giving it a good go, but I think that's what's really interesting is that like until maybe the banks start to see something really, really disrupting, I think they probably look at Venmo and they say, that's disrupting us and it's cool, but it's not having a material impact on our numbers.
Death by 1,000 cuts, right? It's slow.
Death by 1,000 cuts, yeah.
It definitely is death by 1,000 cuts. I mean, but PayPal's very real threat. I mean, PayPal, you look at, I don't know, I don't have access to what the stored value amount is in PayPal accounts, but,
it's not small.
It's got to rank them pretty high on the bank tables.
I would think. So why don't we open it up? We have about 5 minutes left. Any questions from the audience? Go ahead.
And hold it.
So security, I just want you to talk about that in two ways. One is, as banking's moving from the high tower to our pockets, just address as an app builder what we should be thinking about with respect to security. And then the second one is we get hear a lot of stories about cyber attacks and Target and IRS and all the rest of them. How long will it be before we see that one of the big banks are hit?
I'll tell you, the big banks are being hit every day, many times a day. So that's a constant battle. I guess maybe Jamie,
I was just going to quickly say that one of the things we provide companies like Uber and Airbnb is the fact that they don't have to worry about sensitive payment information touching their servers, right? We sort of, it's federated to us, it's tokenized, it's stored in our cloud, and I think that also improves the chances of preventing something like a Target breach, right, where you have sort of a one-to-one relationship as a consumer with a physical plastic card with a mag stripe on it and whatever's happening with that terminal, right? Whereas it's in the case of mobile commerce and e-commerce, it's usually federated to one entity that is just, that's all they do is keep card data safe. So I think online commerce has a big advantage from that standpoint versus offline commerce. You'll see less of the target breaches, I think.
And the one thing I just comment in terms of the industry, I mean, obviously, I'm not going to say we're not going to get hit with a big breach or something of that nature. But I mean, the banks have been worried about security and focused on security for decades. Retailers really haven't, and I think that's why you see retailers getting exposed the way they have. We get hit at Dinsdale. We're getting penetration, people hitting us literally thousands of times a day trying to access us, right? And so that's just the environment in which we operate, I think.
Yeah, I think that the threat, the exterior perimeter of banks is actually extremely strong, especially for the biggest banks. The focus right now in banks, most of it is actually on interior.
Yeah,
you know. So from an app
yeah.
standpoint, I guess what I would also just summarize is that I think that the industry is actually extremely good at defining what the standards are. Things like reacting to the target situation and creating the whole tokenization scheme for payments. I mean, that's basically say, hey, make sure you follow that process. Don't do it the old-fashioned way and expose the data.
Yeah,
right?
I
So
mean,
there's the standards there are standards out there that you should definitely follow.
It's the same thing. To me, like anybody building something new, you leverage these types of infrastructures. The same with our infrastructure, and that's why we're focused on the developer program to expose the secure infrastructure we have and the crypto technology and the data at rest on-prem and encryption keys on-prem and all this other stuff. Don't go and build all that. Just leverage some of these networks that already exist to go a lot faster.
Very good. Next,
Yeah,
sir.
thank you for the good discussion. My question to the panel, anyone can take this question. If a new fintech company were to come with a disruptive technology, yet another disruptive technology, what's your advice to them? Go compete with the banks or go collaborate and coexist with the banks? While collaborating sounds utopian, is there so much money to make from, because most of these apps are directed towards retail clients of banks, is there so much money to make from each retail client that you also take a pie and I also take a pie and both of us can collaborate?
So go ahead.
I'd guesstimate that there are probably 10x the number of companies that have been successful collaborating with the banks than have been independently successful going to the consumer market. That's just my take on it.
Yeah, I think that's right. So we're tracking as a firm. We have this product that we internally call the Disruptor Radar, and we track all the innovators globally. They're literally adding between 5 and 15 companies a day, right? So it's very high velocity. And I would say that the standard model seems to be a pattern where they start out thinking, they're passionate about an undersolved client problem generally, right? And they're going after it, right? And I would say the general model is one where they, try and figure out a way to solve that client problem as directly as possible, and then not too far along, they start to figure out that it's better to kind of figure out how to plug into the ecosystem. There are a few examples that are trying to, really disrupt and take down kind of the incumbent world, but I would say a vast majority, maybe the 90% number, somewhere around there, are enablers.
Yeah, I guess I'm not sure if the analysis is it's better to, but it's a requirement. I mean, there's just things you can't do. Like if you want to run a credit card processor, you can go talk to MasterCard all you want. You need an acquiring bank.
Yeah,
right?
Yeah. I guess I was saying it from the standpoint of how they decide. So that's a very good point. On the enablement side, you got a partner. Like there's some ways that we can't be a bank without a charter in any place, right? But I was talking more on the customer engagement side. And even on the customer engagement side, many will start out and do a Venmo model where they're owning it end to end. Many others start out with a direct model and end up in a white label model. Yep, go ahead.
Thank you. So the digital disruption right now, it's actually a paradigm shift, right? Where the incumbents are looking at, distributing paper-based information in local networks, and digital is all about distributing data globally. But the question is twofold. For somebody like, Zach, that's a huge paradigm shift. Even though collaboration sounds good, how do you actually get the incumbents, to think differently? Because it's a new way of thinking. And for Jamie, now, even if you were to create a venture club within, Bank of the West, that's going to be a small piece of the puzzle. How are you going to change the culture so drastically?
Well, I happen to have joined a bank that only works with innovations, or the innovation economy, is their phrasing, and only works with businesses. They don't have any. I mean, they have a private bank, but there may be people in this room who use it because you have to be, rich and live in the area. But it's not a retail bank in the sense that you'd want to partner with them to like reach a mass audience. So I think I have a theory of the world, which is that the disruption is that there's going to be a differentiation between infrastructure and user experience, and that if there is a bank that can provide that infrastructure really well and can capture a lot of that value and then can partner with the next Braintree or even get like Braintree or PayPal to move from Wells Fargo and can really say like, you know what, we're willing on some level to white label a lot of our services, then I think that bank could be really ahead of the curve, and I join the bank that I think is most likely to do that. Yeah.
Yeah, it's not easy. Changing culture is not easy. It's not going to happen overnight. I think we are at a tipping point where you see more and more conversations about it. Our parent company is absolutely bullish on all things digital. We've launched direct banks, digital-only banks called Hello Bank in several European markets. So we're, at least I like to think that we're part of a company that's more aggressive in that regard. And it just, once you get past that tipping point, there's more and more momentum around it. But it's not going to, 2 years from now, is it going to feel radically different? No, but 10 years from now, it probably will.
Yeah, I would say the big banks are doing that strategy. They are trying to do the arm's length cannibalize yourself model. The interesting thing that I see is if you get just below in every one of the sectors, banking, insurance, asset management, wealth, all of them, there's a very small number of very large players, and then there's everybody else. Everybody else is looking at this in a much different way, frankly, than the very big players. Everybody else is actually, at the management team level, are much more open to saying, let's figure out a different model, because they realize that they've never been able to spend and innovate with the big guys, and they see this as a partnership model that allows for leapfrog innovation in a world where they've never been able to basically play that game. One more?
So earlier there was a question about why do we even use checks still? And I think the main question, perhaps the main reason is that checks are still relatively free. When we do big ticket items, whether it's buy a car or you donate something, and they say, oh, we prefer checks. Do you see us moving into that direction where one day, actually, the money movement, even between merchants or commercial type, will be free? And is that one way perhaps the bank can take back some power, because banks have more ways to subsidize that free service than perhaps other services?
Absolutely. Yes, in flight.
That was a quick answer. Okay,
quick,
so we'll have time for one more question.
Maybe we'll go one more over here.
I have to move over to that side now. I'm sorry. All right.
Real time. Where I'm going is real time ACH is an absolute inevitability. Yes. So for big ticket purchases, the fact that I'm not card dependent, because they don't want the right transaction fee on the card on a card transaction. So real time ACH will absolutely happen.
Yeah.
Yeah, the
Driven by a lot of innovators, by the way, that forcing it.
Regulators have charged banks with oversight of their service providers or companies that they work with, partners that they work with, and we are operating in an environment where banks are being hit by billions of dollars of fines. Often, when a smaller company needs to partner with a bank, the compliance departments, the compliance groups are a big challenge to work with, because unless it's a big revenue opportunity, they're not going to take that risk. Any thoughts around that on working with banks?
Yeah, I think the model is going to change from where it's at right now. Where it's at right now is the agents of banks basically have to put together a plan for, like, this is our anti-money laundering plan, and then they get audited every year. And the truth is, like, I wouldn't trust most of these small companies. And I think that there's going to be a technological contract that's going to be put together which says, we're the bank, and we're actually really good at compliance, and we're really good at know your customer, and we're really good at anti-money laundering. And we're going to provide that as a service, essentially, at, in my mind, an API level that says, okay, you can do all the real-time transactions you want, but with every one of those real-time transactions, you have to send us 3 of 5, or you have to send us the proof, and we're going to run the OFAC check automatically, and we're going to run the other sanctions list checks, and we're going to see if you're a politically exposed person automatically on our side, the bank side. And that's just going to be part of the service package, is a compliance and risk package. I think most banks, that's a conceptual shift to say, like, okay, instead of having our agents just out there and we sort of trust them, like we're actually going to sort of pull into ourselves that risk management. But I think that's the only way that you can work with smaller and smaller people is by saying, you're not an expert on risk, but we are.
Yeah, I think that's been facilitated. So over the last few years since Dodd-Frank, the onus has gone on to banks to be responsible for everything that any vendor that they use, right? So banks have started to get really good at figuring out how to check not only vendors, but their vendors' vendors. Because the risk all hits them, right? So that capability, that new muscle tissue that's basically been built over the last few years, I think will facilitate this sort of model.
Well, I think they'll start charging for it.
They should charge for it. And frankly, it's actually a set of services that the innovators should be, I think, very happy to get because it's incredibly complicated stuff that you don't really want to be good at, right?
So the only downside of that is waiting for that to happen, right? So who knows how long that will take? So, so
We're counting on Zach. He's going to come through.
It's a great ideal, but I think it kind of goes back to the earlier stuff. I mean, leverage some of the folks that have thought through these issues and have already got banks comfortable. So our platform or Braintree or others, that's one way to get in faster. And it is still amazing. I mean, our biggest challenge getting into banks and different use cases is this stuff.
Yep.
And we've had to quadruple our expense in security and all the other things. And I think SaaS companies in general are becoming way more sophisticated, mobile companies way more sophisticated, and you have to be able to talk the bank's language and take their concerns seriously because they're real. And that's a big sort of industry trend across with SaaS that's taken SaaS companies a really long time. Most SaaS companies don't understand the actual requirements of banks.
I agree.
Wells Fargo and Chase are still way on the other side of adopting SaaS, actually.
Right. Very good. Thank you, guys. Appreciate it.
Thank you so much, guys. We could have talked about this for the whole day, I'm sure. Thank you.